Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 17th, 2016. Happy St. Patrick's Day to everybody. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we come together to take a look at the market, macro to micro, the structure of the market, and then we drill down to our trade levels, our trade targets, and our hypotheses for the day. This is a subscription room, so I'll put my contact information up in just 1 minute. But before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you are interested in checking us out, send me an email at quantumleapfutures@gmail.com. There is no website. There's no blog. This is what we do here live every day. We do live analysis and trading during the course of the day. Send me a contact request on Skype. You will need a Skype account. It's free to open, easy to do, and send a contact request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And then if you like this video, there are over 300 days up on YouTube. You can check it out. Just do a search for Quantum Leap Futures. And of course, if you like what I do, please follow me on Twitter at Crazy2. So, whoops. So yesterday was Fed Day, FOMC. Our Fed number is 2001.75. Some people are using 2002, but the actual time of the announcement was we were priced at 2001.75. Our hypothesis was to chop around in balance in around that 2006.75, the little micro composite VPOC that we had. We were doing that. We were doing a really good job of that. And then just before the news announcement, they took it down to the midpoint, tested the midpoint, and then we had the news come out and we launched from there. Obviously, the Fed didn't do anything, and we went and broke. First tested that 16 area and failed. Came back to the 2006.75. This was a three-wave structure. You had the impulse wave, correction, and then continuation. And then we just we went up and made some new highs and revalued the market and chopped around up top. Overnight, we've gone up higher. We've tested the 27 area, and since then we've come all the way back down and are trading back down in the middle distribution. This low volume area from yesterday's news event, and we're filling this in right now. So each morning I like to start my day with a basic candlestick chart. I use a 9 EMA and a 20 SMA, just reviewing where we are in the trend in the different timelines and where the trends are being violated. Of course, we've got this beautiful upward trend for the last couple of years. In the monthly, we have been challenging it and violating it, and we came up and we're trying to take it back and get continuation, but we failed to get above the 20 SMA and hold above there. That's going to be a key area for us up in the 25-27 area. But so far we're just in consolidation right now as the trend has been challenged. The weekly, we had started a downward trend, and then we took it back the last few weeks. We're holding above the 9 and the 20. We're waiting for an MA hug to come in and possible crossover for possible continuation of the trend to the upside. On the daily, much more clear. We've already got good slope and separation. We are trending up right now. We do not break the trend or even challenge the trend until we get down below. I'm using 94. The 9 EMA is at 97.50, but 94 is my key line in the sand below. Going to the intraday, you can see that we're just stair-stepping up, and they came back and tested the 20 SMA and we've rejected it. We're in between the 9 and the 20, but we are still in a continuation pattern up. On the 1 hour, a little bit different. We came down hard off of that 27.25 Globex high, and now we created a FUBAR Mr. Sneaky on the 1 hour, and we're coming up to close the technical gap. The technical gap will take us up into the 2015 75. 2016 is going to be the major key line in the sand, and I'll show you why. There is a naked cross up here on the 1 hour at 17.25. Keep that, write that in your journal. Going to the 30-minute, we've got a downward trend. They created a technical gap. They've come up and closed the gap, and they've rejected the 9 so far, and we're staying below. We've got slope and separation to the downside. I'm expecting that we could see some continuation unless we get back above that 16. Going to the 15-minute, same thing. You've got good slope and separation, but we are losing some slope and separation right here in the last 30 minutes on the news. The Philly Fed beat, and the unemployment claims were better, so we do have some news that could revalue this. But right now we're trying to hold above the 9. A move up to the 20 SMA is going to take us up into that 15-16 area. There's that 16 area again. Then going down to the 5-minute, you can see that we came down. We had a FUBAR Mr. Sneaky. They closed the tech gap, and now they've been consolidating sideways, and we're starting to get slope and separation to the upside. So not a real clear direction in any of the different time frames, but the smaller the time frame, the more positive it looks right now. And the key level is going to be 16. Why 16, do you ask? Okay, well, I'll tell you. We talked about this yesterday and the last few days, that once we broke out of this this balance area down here, we kept on accepting price higher. They came up and accepted price where they tried to hold value after falling out of this upper balance area that we were in for most of the fourth quarter of 2015. They fell out of it in the beginning of this year, and the first spot they tried to hold was right here and around the 78. They came up and they accepted that price, then they gapped up, and we've been trading in this little distribution zone for the last 3 days, 4 days with yesterday's breakout candle, and we were challenging this 2008, the value area low, and yesterday we popped up and we challenged the microcomposite LVN that separates this double distribution. And if we can get above this LVN, then we're in this upper distribution with a lot of repair work to do. If you look in here, you can see there's a lot of gaps. Okay, a lot of undetermined fair value up in this area. You can see it right here: 55, 49, 75, 45, 39, 34, 31. The last price they tried to hold value before they fell out of this balance was at the 34 level. So if we get above the 16 level again, I'm looking for a challenge to the 19. We failed on the RTH session to get above the little CLVN at 22. We did pop up and test this 27, which is also a naked close and a gap in the overnight session. If we get above 16 today, I'm looking for a grind up in to test that 27 area again and up in this double distribution between 19 and 24. Above 17, it's all about this 34, with 31.25 as your first primary target. There is some target here at 28.25, but the primary target above is going to be this 34. And that puts us above the 32.75 and clearly in this upper distribution. And I expect that we would get continuation to the upside on this current rally that we're in. If we fail to get above the 16, I'm looking for a move back towards the 675 and the 04 and chop around here. Probably have to come down lower again and test the lower side of the distribution down to our key line in the sand below at 94. And anything below 94, I think we've got an interim top in, and we're going to come back down towards the 75 and come back into the 1900s again. So let's take a look at what's happened overnight. Overnight we went and put a overnight high in at 27.25. That's right on that naked close. Our daily ATR target so far off of the bottom, I don't think we're going to put a new low in. So we got 2005.75. Our daily ATR, 20-day ATR is running at 27.55. So our upside ATR target is up at 33. 33.25. Got a little bit of a cluster going on in this 33 area. Take this trade area off. So our daily upside target is up there. Our weekly ATR target doesn't change. It's still up here at 2071.50 with the new high that was put in at 27.25. Our daily downside ATR target is at is at 1999, and that's right at the naked VPOC from the other day. Our overnight VPOC is at 2010. And our overnight low is 05.25. And basically we had a double distribution in the overnight session, and look where the LVN is at 16. So, and we've got the naked close at 16.50. Our value area high is 16.50. This is going to be a key area for us. I know it's right above us, but I'm expecting if we get above it, we're going to stay above it. That's why it's a key line in the sand. And then above, so let's do the upper numbers first. Above there, obviously 19 is going to be our first target. We don't need this anymore, so we can just get rid of this. We can expand this. So there is a little bit of resistance at 14.50, but again, it's kind of a blunt area here between this this 9.75 and 16. So I don't think you got a really good edge there. I do like the 9.50 as a trade area, because if we get below that, you got a nice target at the 6.75. The microcomposite VPOC and the CHVN and the naked VPOC is all down there between the 6 and 7 area. So below the overnight VPOC and below this LVN from you can actually even probably move this up to 11.25 on the midpoint and VWAP. Just make sure you're funded before the 950, because you could hit a collision there. If we get above 16, you've got 19, and then above there, you've got the 2450 target. You've got a CLVN at 2275. Our high overnight from our RTH session yesterday is 22.75, so I'll use that as a trade area. And then, of course, you got the target of the CHVN at 24.50 and the overnight high and the naked close at 27.25. Above that, we don't really have much resistance until we get into the 32.75. I'm going to take this 31.25 off and just use the 32 as a possible. But the thing with me, when you get a CLVN and you've got major targets just above, you really have to look at those. So I would actually, what I would do then in this circumstance is you get to 27.25 and then you got 29. What I would do is I'd move this down to 29. Because if we get above 29, we're back in price discovery. We're above the overnight low, and you've got a solid target up here at the daily upside target, but more importantly, that naked VPOC at 33.74 and the microcomposite VPOC the naked VPOC at 33.75 and the microcomposite VPOC at 34. And then above that, you got 39.75, 43, the naked close at 45, and then 49.75, and then 55. Remember that 2061.50 is the most traded price going all the way back to 2013, and just above it, 63.50, is the microcomposite VPOC of this whole distribution zone up here. So value is clearly still above us if we get into that distribution zone. So that's what I'm looking at upside. To the downside, below the 11, I'm looking for a move down into the 06.75 and a takeout of the overnight low. Just below that, we've got the microcomposite value area low at 2075. There's an LVN there as well. I'm sorry, the value area low there as well. So I'm going to put that in. There's not really much. I would target the 04 if we break the 05 because that's the dominant CHVN in this area. And then below the 2075, I'd look for them to take out the overnight, the RTH low, and come down and take out this naked VPOC at 99. Then you got 96.50, and then the key line in the sand at 94, and then all our targets that we've been looking at below, 90.50, 89, 87.25. The next big support line is 82.75, and below that, the two big key areas is the 79.75 and 74.75. My main hypothesis right now is to chop around in this area, this low volume area from yesterday, and then if we fail to get above 16, a continuation down towards the 06, 07, and move down to take out the overnight low and challenge the range low from yesterday. If we chop around here, we come down first and find responsive buyers in 2006 to 2004, and then move up. I'm expecting to break through and get continuation up in to test the 20s again, and then chop in around the upper distribution of the RTH session and the overnight session and start filling that in, possibly pop up into the 33, 34. I'm not expecting a lot of movement today. I think it's going to be rather sluggish. Remember, it's quad witching, so I think it's going to be rotational to both sides, and therefore one side is not going to be dominant, and we're probably going to get a rotational day, possibly a neutral day. Yesterday was a neutral day by 2 ticks to the downside. and then the news revaluation. So we had a neutral day yesterday. That leads, a lot of times to another neutral day today. So that's going to complete the pre-market session. Our Keltner center line is at that 11 and a quarter. And if we hold above it, we should move up and test that 16 level. And upper Keltner's up at 17 and a quarter. Below the 11, a move down to the lower Keltner is going to take out the overnight low at 2005. So as always, trade well, trade safe, and we will catch you on the flip side.